Hi, I'm Hannah Wallace and welcome to FinextraTV. Kindly joining us on the call now is Eelco Boonstra of Mambu. Hi Eelco, thank you very much for joining us.
More than welcome, more than welcome.
So this is part of our Thought Leadership series. So we're going to be taking a step back and looking at the banking industry today and homing in what banks need to do to compete in what's becoming an increasingly competitive market, I think you'll agree. And neobanks and incumbents, what's happening there and how their relationship is changing. So to kick things off, it'd be great if you could sort of set the scene for us and tell our audience where we are with the banking industry today, but also especially in light of COVID-19, because we've seen a lot of disruption there, haven't we?
Yeah, we have indeed. We have indeed. I mean, if we look at the banking landscape these days, it has been changing fast. Mainly, I think it is because the customers are driving it faster. I mean, we have had two parts influencing. One, it is the customers. So the demand from the customers has changed onto the banks because simply the interaction with technology has just changed the mindset of good service. So the customers are more demanding of the current banks, but due to, let's call it the opening up, let's say open banking part of the industry has allowed new entrants to come in, which actually leapfrog into new technology and accepted new technology a lot faster. Also making that, let's say, closing the gap from technology from banks towards expectation of customers a lot faster. That means you have the old banks trying to catch up and close the gap between expectation and their legacy stack, where they can't do everything. And you have the newcomers who are very software driven, but maybe have less, let's call it product stack available to roll out to their customers. So there's a gap there. Then on the other side, we have COVID that said, well, that has changed the field as well. I mean, not just because we're doing this interview today from a digital way, but also it has sped up the expectation of customers to also interact with their, let's say, bank and their money on a digital way. They do not have the ability to go to a bank, go for a loan, wait a couple of weeks, have a meeting again with a person from the bank. So the new banks have already, of course, changed, let's call it landscape, how you interact with your money and also with the bank. Now it is, let's call it in super speed, let's say the turn to the old banks to catch up. And it is, let's say, changing literally the way also we as vendors interact with the banks today.
Yes, there's been a huge shift to digital, especially as a result of COVID-19. And now you mentioned traditional banks having to make some big changes. Could you highlight for us then what have been the main opportunities and challenges they've experienced through this change?
I think the big challenges for the big banks is twofold. It is technology, meaning that they need to go from a bank that is very good at, let's call it all aspects of finance, risk management, all topics that they've, let's say, gathered knowledge on for the last 30, 40 years. They need to move to a software company. So the style of where software, or let's say the IT department, isn't seen as a cost, but is actually seen as an asset. So it means it's a cultural change as well. It means they need to set up the organization in a different way to look at it from a customer-centric approach instead of a product push approach. So it means that in order to really close the gap to the new entrants, which already more or less are a software company, they need to really take big steps to, let's say, cross that chasm. I think it's not so much let's call it the step into technology that will be the biggest hurdle. It's more the cultural change of being a huge organization and to have to change your policies, to have to change and adapt to, let's call it the speed at which the new entrants are at the moment traveling.
Because we hear that word culture being passed around quite a lot at the moment. Would you say that's the main and most important driving factor for change in these banks?
Well, it is. I mean, next to the fact that, of course, the big banks see that if a new bank like an N26 or like the Revolut of these worlds come in and they can, let's call it, get new customers at, for instance, a third, even to a tenth of the price, depending on which market, and service them at that rate as well. It's not just culture, it's also just a simple pressure on who gets, let's call it, the younger part of the new customers. And that is a service item. It is a customer journey item to really connect with your customer on both price and expectations of, let's say, what you can offer with new software. But yes, it is also a cultural shift, because imagine that you're in a bank which almost looks like a governmental agency in that sense, in the way it's organized. It's pretty difficult to have a 250,000 people organization shift to the same speed that, let's say, a 400 people organization is moving at. That is not an easy task.
No.
So it is a managerial task. It is let's call it a task that needs to be carried and thoroughly communicated and supported by initially C-level and board level of a bank, and not just at the, let's call it, deep end at the customer side.
Mm-hmm. Well, that's culture then. But what about technology? That's pretty important too, isn't it? So homing in on that, what kind of technology are banks looking towards to support their growth?
Yeah, I think if we look at technology, most of the company, let's say most of the banks really look at, or at least have grown from a stacked vendor perception, or at least they've always worked with stacked vendors. It means that the products have been built to the bank's fit. In today's version of, let's call it, product 2.0, and to really serve the expectation, you don't need to build a product to last. You need it to speed up, let's say, your go-to-market and really fit your customers', let's call it, expectation. Mm-hmm. So a platform instead of a, let's call it, stack, is something that is a more fit to the market, and also with an ecosystem around that, that you can really pick and choose at the time you need it, the right supplier, and maybe not best of suite, but at least best to fit that moment and the customer's perception, to really get to a market position faster instead of having to wait and build. So build to last doesn't work anymore, at least my perception. Mm-hmm. So what that also means is, if you look at where they stand today, they, let's say 2 years ago, really did not perceive cloud as an option because of technical risk. Today, they still see some of that risk, because also a lot of insecurity on how do we move the big, let's say, data stack and everything else to cloud. That was the first perception, because they've always done transformation projects. Now they're looking at, okay, we don't see cloud as a risk anymore, but it's a business risk if we don't move fast enough to the cloud. So meaning that they embrace already the cloud and also the platform technology. And they're also copy-pasting, of course, of the learning moments that we have from N26 and all these guys. But now it is, how do we productize, let's call it, our transition to it. So not make it a big transformation project, but really look at it, which parts can we, for instance, just SME and just simple products on the SME side, set that up first, dip our toes in the water, don't burn the complete organization, but really look at, can we do that, for instance, in an offshoot, and really go to the cloud and set up this new, even with your own brand, a product, let's call that, organization, and support the customers and really get used to this new customer journey on one side, but also get used to the technology stack, in their words, to support that on the cloud with an ecosystem that fits. And grow it, and let's call it, fail fast and learn quick. Because I think that's the whole thing. If you fail fast, learn quick with new technology, you'll be able to adapt to the new speed. If you try to do it in the old way and make it a long project, you'll fail hard and will not recover.
So that's interesting, but taking into account those challenges and opportunities, also those risks, my natural question following that is, who do you think will be the winners and losers moving forward? Because I think it's fair to say we've seen a blurring of the line between neobanks and incumbents, hasn't there? What do you think?
Well, I mean, there's of course losers and there's of course winners, naturally. And if you look at the winners today, when we look at it from perspective of getting new customers to adapt, or at least just getting new customers, period. The winners are, let's call it the digital banks. So let's call it the N26s, but also just the new 10 or Revolut, Monzo, you name them. But if you look at the big chunk, still, where are the customers with their assets? Where are the customers with multiple products? Let's call it the mortgages, you name it, where they're still fixed. It is still at the big banks. So you could say that you need to not look at today where are the winners, but you should maybe look at, okay, where do we need to transition to, let's say, within 1 to 2 years, and who will lose out then? I think that the ones that will lose out are the ones that do not adapt, so that do not start already transitioning into digital model or cooperate with some of the, let's call it, new entrants. Because the new entrants have a speed to market, and yes, they have a software background in the sense of company style and how they manage it. But what they still lack, of course, in a certain sense, is this 30 years of risk management, this 30 years of product insight, and let's say really depth knowledge of what customers, let's call it, used, not need, but used.
Yeah.
So if you combine those two, you get a lethal weapon. So I think we'll see, let's say, new offshoots from the bigger banks first go into the market. The market is getting more and more crowded. So we will see, let's call it, the market consolidate, not just from new entrants from the financial side, but also from new entrants that come in from a more, let's call it, commercial side on the, let's call it, the e-commerce side. They already have customer lifecycle experience. They have a lot of data points on what the customer needs. If you would combine that with the bigger banks that have a financial background, and you merge those two typologies of companies, you would get a monster. So I would see the real winner is the customer, the end customer, because they'll have the best of both worlds. They'll have better, let's call it, service because of speed and because of their agility from, let's say, the new side, but they'll have better, let's say, insights into the product that they've already been using for years, and better service on depth of let's call it, financial products, if it's being combined with the bank knowledge that is already there with the old banks.
Mm-hmm. It will be interesting to see how the space develops, because there's going to be so many players, and whether there's going to be space for all of them to play nicely together. So you've mentioned there how the market's evolving and a little bit about what they can learn from each other. But what would you say are the sort of top lessons the incumbents can learn from the neobanks and vice versa?
Well, it's usually summed up in one sentence that if you're built to last, it means that you're usually quite fixed in a certain way. I think if you're built to change, which the new banks are, it means that due to the fact that we are changing, look at COVID-19, it's changed our complete look at the world. You're more flexible, so you can adapt. People's wishes and people's demands are changing, I would say, on a yearly basis, a lot more frequent than they did before. So you need to be able to change to at least be, let's say, certain of a place in the future. So I think the best lesson for the big banks from let's say the new entrants is to become more flexible, to become more like a software company, and to really look at your customer's journey instead of looking at the corporate as, let's say, a company that will always survive, because that's not reality. If we look at some of the past, I would call Polaroid, I would call some other companies in other industries thought the same way. Digitalization overtakes you, so you need to adapt today to be there tomorrow.
Mm-hmm. That's interesting. All right, well, I want to end on the crystal ball question, as it were, and sort of look towards the future, being propelled, moving forward. What does the banking landscape look like in the, say, sort of next decade or so, taking into account what we've covered so far?
Well, if you find a shop where you can buy that crystal ball, please purchase two and give me one, because I love that. I think actually there's one topic which is for sure. We're getting more data, more and more data is available. So it means that also analyzing that data in a quicker way and being able to produce, in that sense, products based on that in a quicker way will alter the landscape in banking and insurance, and that's called the whole financial landscape altogether. So it means that the pace, as already mentioned, that let's say the whole landscape of finance will move is going to be tremendously faster. Because if we look at internet, how we're using that today as compared to 10 years ago, it's completely different. That place we should look at also banking. It'll move to a customer-oriented way of, let's call it using products, but also interacting with people. If the banks cannot cope with that, they will cease to exist. Cooperation, in my opinion, with everything outside banks will be a normal, a new standard. And I think, yes, we will have less and less, let's call it, competition in a certain sense, because we will see mergers happening from all sides. But it is not for nothing that we have so many new offshoots and so many new banks. We will have new initiatives popping up everywhere because it's going to be a more fluctuating market. So I would not say that the big banks will be there to last forever. I think part of that will also be taken by smaller entrants who just service the niche markets instead of the big, let's call it, group of people that will always stay with the bank.
Sure. Well, Eelco, I hope we get a chance to talk further down the line and we can look back on this interview and reflect. But for now, let's leave it there. Thank you so much for coming on FinextraTV and speaking with us today.
No problem. Thank you. Glad to be here.